Well, good afternoon. Today is Friday, the 24th of October. I hope everyone is doing well. Well, we got some much anticipated, if not delayed, news this morning. Normally we would have had the CPI report Wednesday of this last week, but we got it today, again delayed due to the government shutdown. Hopefully we will see an end to that soon, folks. I am talking to a number of folks. Of course, here in San Antonio, we have a very high military presence here. So there's a lot of folks that are frankly just sitting on the fence waiting for this thing to end so that they can get back to house hunting without an interruption to their budget. So in any event, hoping that ends very quickly so that we can get back to normal business. Here's the deal with interest rates, y'all. We've seen them trending kind of gently lower over the last week. There was a couple of days during the week where it was a little bit lower than it is today, but not much movement. We'll go right into the numbers. According to Mortgage News Daily, 30-year fixed rate conforming loan national average 6.19% today. We were at 6.23% a week ago. That's not much of a move, but at least it's in the right direction, y'all. We were at 6.37 a month ago, so we're I guess not quite a quarter of a point cheaper than we were this time 30 days ago. The CME FedWatch tool, in response to CPI that came out today, now has a 96.7% chance of a quarter point cut at the Fed meeting on the 29th of October. So the Fed's moving a quarter in October, y'all, the end of this month. There's a 92.2% chance of a quarter point cut, an additional quarter point cut at the 12/10 meeting. There's now a 53.7% chance of a third quarter point cut at the January 28th meeting, which is going to be the first one of next year. So we're going to keep an eye on Fed futures and see how they continue to track. The CPI didn't give us any reason to be concerned about the Fed's likelihood of a cut, y'all. Really, the CPI could only have hurt us today. It was either going to be steady as she goes as far as a Fed cut at the next meeting, or it could have popped something surprisingly high, which would have put a lot of jitters into the fixed income markets and moved rates in a really appreciable and ugly way. Thankfully, we did not see that. The report overall was generally flat, but it was actually improved slightly, about a tenth, both on the month over month. We were expecting month over month to be 0.4 hot. It came in at 0.3 hot. We were expecting the year over year to be at 3.1% for the annualized rate. It was at 3.0%. So a little bit better all the way around, y'all, than the markets were expecting. And no upside news was definitely a relief for the bond market. So we're staying steady and on track. As I have mentioned so many times on these calls, y'all, and on these videos, the Fed, or the markets, do not wait to price in the likelihood of what the Fed's going to do. They're not going to be caught holding the bag with a surprise from the Fed. That's another way of saying the pricing that associates with a Fed cut on the 29th of October is in current pricing. We already have it. So if you're waiting for the Fed to bring rates down at the end of this month, it's in current pricing. So I just need to be emphatic about that. The only thing the Fed can do at this point is disappoint us. And as we saw with the last Fed cut in September, rates actually went up after that cut, and they stayed up for about a 3.5 week period before they started trending back down. And we are just now to where we were the day before that cut. We're literally right on the line of where we were the day before that cut going into the next Fed cut. So really all the Fed can do at this point is disappoint us with unexpected news. But if they stay on track with what we're expecting, then rates are going to probably continue this gentle trend looking towards the next Fed meeting in December. That's when it starts getting interesting for us, y'all. We could be starting off next year with something that looks really significantly better than where we're sitting today. So in any event, a lot of good news on the horizon, a lot of good news already happening with regard to the markets. I know the shutdown is inconveniencing a lot of folks, and there's folks that are having to wait for a paycheck now, and that's pull them out of the market temporarily. But y'all, we could have an unexpectedly strong fourth quarter if rates continue this trend, particularly with the shutdown eventually ending, so that we can finish this year strong. In any event, hope this is helpful for you and for your clients. As always, we're blessed to have your referrals. You've got all my information on the screen. Stay blessed, stay safe, and we will talk to you next week.